Blue chip crypto. Blue chip crypto 3. Now we're going to cover Patrick Davis and Michael Saylor. Did an awesome interview. Let's react to it. Let's audio react to it. Patrick Davis, you got the floor.
If you build a company and you're going to take the money, you're going to say, I'm going to reinvest it in whatever I operate. Okay. And what I operate, I can foresee growing it, pick a number, 100% a year. Okay. Even if you grow a company 100% a year, let's just say your first year you do whatever, $1 million. Okay. Second year you do 2 million, 4, 8, 16 million, 32 million, 64 million, 128 million, 256 million, $500 million, 1 billion, 2 billion, 4 billion, 8 billion, 16 billion, 32 billion, 64 billion, 128 billion, 250 billion, $500 million, 1 trillion. Let's look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. If a person started a business today that did $1 million this year and they grew at 100% the next 20 years, even in 20 years, when you're a $10.5 trillion company, they're just going to be a $1 trillion company. So you're seeing this as, rather than operating a company, we're going to be better off just knowing what's going to happen to Bitcoin, because Bitcoin is going to be the next Manhattan.
Basically, what I'm saying is that the 29% ARR is the risk-free cost of capital in the crypto economy. And the way you get to that number is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster.
55 to 60%. Now, when you guys do the math, to me, this is the big asset to hold. This is one of the greatest assets and the greater investments to hold. Not financial advice, but it seems to be working for me. Let's continue.
Sure, before that, but right now, Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. The mainstream economy is plus 15 points. Bitcoin is 60. They're going to converge. As Bitcoin gets to the size of the S&P, when it's 100 trillion or 200 trillion and it's close to the S&P, it's going to be 1.5x the performance of the S&P and 1.5x the vol. The VIX, which is the S&P volatility, is about 15. The ARR is about 15. Bitcoin's like 60. I mean, you can figure it out from the law of large numbers. When Bitcoin's $100 trillion asset class, it's not going to be as volatile. And of course, at some point, companies in the S&P are all going to hold Bitcoin. And so, like, if MicroStrategy gets in the S&P,
I think that's a great thing. If you have a company and you actually hold Bitcoin on your balance sheet, I think you're balancing your company quite well. Not only that, right? Think about it. If you borrow against your Bitcoin to invest and get more Bitcoin, and or if you say, for instance, most companies, they go 5, 10, 15-year run. Most companies don't last a lifetime. Meaning that you might have to get your company all the way up, sell your company to someone else, right? And or your company might dissolve in 5, 10, 15, 20 years, depending on the technology. But to me, Bitcoin is something that I like to say that it gets you rich and it actually keeps you rich at the same time. It's a get rich, keep you rich scheme. Not even scheme, solution, technology. It's a get rich, keep you rich, because it's not going to go down in value. It's something you can pass on to your kids, your kids, your kids. Because by the way, they have the phones directly in their hand. That's the future. But let's continue. I appreciate Michael Saylor for doing this. He's selling this ocean blue with this one, and his strategies are actually excellent. Go check MicroStrategy out on the stock exchange, right? Because that did tremendous, went up by 400%. And also, he just doubled down on Bitcoin and spent another $40 billion investing in the Bitcoin. Let's continue.
And Tesla owns Bitcoin, and other companies, if Microsoft starts buying Bitcoin, pretty soon the performance of Bitcoin is going to goose up, is going to improve the performance of the S&P, and then Bitcoin's going to converge. Bitcoin's always going to be more volatile because it's 24/7, 365. and it's always going to be higher performance because it doesn't have the risk factors of property or companies and the like.
I think this is what you showed, right? You were showing this. At
Yeah,
the
that's the
presentation,
chart.
Brad.
And
bonds, gold in the last 4 years, 6%, real estate 10, S&P 50.
Pay attention to this chart. This chart changed my life. It's the Cantor Crypto Digital Asset and Infrastructure Conference, right? This happened in Miami, Florida. Now, look at the annualized asset performance chart right here. You have 60%. This is Bitcoin. You have the Magnificent Seven that goes up. This is ARR, annual return rate. It goes up by 29%. You have the S&P 500, which goes up by 15%, right? But you got to think about taxes and everything else, right? So how much did you really make? You have real estate that goes up by 10%. You have gold that goes up by 6%. And then you also have bonds that's a negative 5%. So the greatest investment of our lifetime is literally a technology that's sitting right in front of us. Is not going to be many left because once it's sold out, it's out. In fact, it's something that you don't even sell. You accumulate. Not financial advice. Let's continue.
15.
You know, that's a very useful chart. You can pretty much understand the world if you focus on that, which is if you capitalize on bonds, you're minus 5%. That's why all the banks are struggling. And that's why operating companies can't accumulate capital. Because what that's telling you is that if you're using bonds as capital, it's toxic. It's sucking 5% of your life out of you. And look at the cost of capital, 15%. So here, if you use bonds, you're minus 20% versus the S&P. That means that it's an awful, way to build shareholder value. If I asked you, do you want to hold $100 billion of cash in bonds and you're Apple or Microsoft? The answer is no, because it's minus 20%. You might as well just give it back to the shareholders. They put it in the SP index. But now look at the other side, right? Bitcoin is 4x that. So if I said you could put $100 billion into bonds or $100 billion into the S&P or $100 billion into Bitcoin, which of the three charts do you want? It's pretty obvious. You take the 60%. So what MicroStrategy did is we capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. Like, that's why we outperformed NVIDIA. Like, we're 2 or 3x NVIDIA over this time period because we're actually capitalized.
Whoa. Did y'all hear that? They outperformed NVIDIA, which makes sense to me because I got Bitcoin being worth $1 million by 2030, by 2040, $2 million. By 2050, if it goes up, another 60%, about $3 to $4 million. By 2050, 2060, about $10 million. It's going to be worth millions of dollars. Think about it. Just think about it. It's known as stored value for a reason. Digital store value at that is digital energy. But let's continue.
Now, coming back to the idea of growth, look, the big idea here is there's $450 trillion of money invested in bonds, invested in real estate, invested in equity by wealthy individuals, families, and institutions, and it's just for a long-term store of value. People that are wealthy just want to stay wealthy. People just want to keep their money. So they're buying these store of value assets from the 20th century. And those store of value assets, they kind of bleed 3% energy because of famine and hurricane and war and inflation and competition and obsolescence and accident and torts and unions. And fill in the blank with all the things that cause your investment not to work. That's 3% of 450 trillion. That's like 10 to 15 trillion dollars of entropy, of chaos every year. So the big idea is Bitcoin is just here. The money is just running from the 20th century to the 21st century. It's moving from physical space to cyberspace. It's moving from the finance space to the digital economy, the analog to the digital. What we're saying is sometimes the most lucrative thing you can do is do nothing. That is to say, I'll give you an example. You have $1 billion, you're in Africa, and I tell you, you can go and invest in anything in Africa. You got to hold it for 30 years. I'll give you 1,000 guys to analyze everything. Or you can buy $1 billion of Bitcoin. And you're like, well, the $1 billion of Bitcoin is doing nothing. I'm like, yeah, you're keeping the $1 billion forever and you're doing nothing. The $1 billion invested in Africa is I'm taking Egyptian risk. I'm taking Zambia, Central Africa risk. I'm taking.
So basically what he's saying is that your risk to reward ratio with Bitcoin, right? Your upside is 10 times more reward than a risk. Basically saying any asset class actually can't compare. It's actually one of the safest investments that you would ever make. You know, and we're not saying this is not financial advice, but to me, it seems that it is. Now, I'm not saying people can't access your Bitcoin by doing egregious things and crimes and XYZ, right? But for the most part, it is secured. And I'm sure as time goes on, they're going to build other security systems. And hell, it might be me that built the security solutions. You know, because you need your key, you would need your MFA, right? Your authentication that you would then need. It's so many different layers of things that you could do to protect your assets. Hell, I might even add I print, facial recognition, and your fingerprint, just to make sure that it's safe. Because it's worth protecting. It's worth going to the extremity in order to protect, because it is a value and it would be worth millions with trillions of dollars market cap.
I'm taking Nigeria risk. I'm taking risk on that ranch. So most of the time people have to take risks and then they got to worry about it. Bitcoin is risk stripped away from the capital. And inflation stripped away from the capital. So when I evaluate any investment, my view is, okay, well, is it going to give me a risk-free 29% ARR? By the way, coming back to that, it's like 60% ARR collapsing down to like 20% over 21 years, and the average works out to 29%. And the assumption is the dollar supply keeps growing at 7, 8, 9%. And then you get an additional gain because we invent robots and AI and flying cars. And so the actual S&P index is growing because the US prints more dollars, but it's also growing because we invent obscenely cool, useful things like the iPhone or like electric cars.
That's why Tesla, Bitcoin, these are all technology companies now. Y'all got to remember, if you study history, right? No with technology change humankind. It's generally a technology that end up changing humankind. For instance, look at us right now. We're currently on the computer. You currently have a computer in your hand, which is called a cell phone, right? Or a mobile device. So therefore, technology is changing things. You can make millions of dollars on your cell phone. If you're not making money from your phone, you're just paying your phone bill every month, something is literally wrong with you. My advice, and I normally don't give financial advice, but this is my advice as far as just person to person, people to people. I have love for the people. I want to add value to people. Figure out a way how to make money from your phone. You can do YouTube. You can do trading. You can do Weeble. You can do so many different things. You can do consulting. You can do so many different things. You can create digital art. It's so many things you could do to make a plethora of money that there's no excuses in today's world, because we have everything you need in order to do it. If you don't know how to do it, you can do your research. You can enroll into YouTube University. You could figure it out. You can get a mentor. It's so many things you could do. You could pay to be in groups. You could do so many different things. It's no excuses. Excuses for the weak and incompetent. Let's go.
So the future is good. But at the end of the day, Bitcoin's future is just pure digital capital. And I look at it as why don't I just keep buying something going up 29%? All I got to do is borrow the money or raise the money at a cost of capital less than 29% over 21 years. And, and it.
Michael Saylor is actually showing you how to sell. Let me repeat. If you really listen to what this man just said, he just told you one of his codes. Go borrow some money for X amount of years, as long as it's not over 29%, you, as far as interest rate, you have the ability to make money. Let me repeat. Go borrow some money, make sure your credit right, make sure you're not doing it in your personal, make sure you do it in your business account. Go borrow millions of dollars, billions of dollars if you can. If you can borrow trillions, go borrow that as well. Make sure that you invested in the one thing. That one thing may be not financial advice. This is not financial advice. We're hypothetically speaking here. That one thing may be Bitcoin. You will have an annual return minimum of 29%. Annual return minimum of 29%. Right? If that's the case, and you may owe, let's just say you owe 0% on your interest rate, or you might owe a couple of percentage, 5%, 10% on your interest, right? From you borrowing the money. You then walk home with 20% return. In 5 years, right? In 5 years, let's just say that you walk away with 20% after all is said and done, right? Taxes and everything else, right? You walk home with 20%. In 5 years, 20 times 5 will then be 100%. You have then made your money back. He's showing you how to sell. He's teaching a man how to fish. Michael Saylor, you got to give credit when credit's due. He's teaching you how to fish. So go fishing.
It makes sense for us because we're a pure play, right? People want us to do that. I mean, the people that are short, they want us to be pure play. The people that are long want us to.
That makes sense. It's very honest relationship both ways. The guys that want you to fail, they want you to think long-term because they want you to fail long-term. So you're patient about it. So they're going to make money off you. But the guys that are also pro you, they also want you to be long-term, that you're patient with it. And I get that part.
Yeah.
I guess the question and the part that you explained, which was very simple, was this is something anybody can do. It's duplicatable. I'm not sharing anything with you that's complicated. Rob, can you go to that one slide that he shared about Manhattan, which I think is the best one? If you can go to the one with Manhattan where you're breaking down the different ones that he had. It's right there. Yeah, this is the one. 1626 Manhattan. Can you zoom in a little bit, Rob, so I can see it? What was it? 60 guilders.
What I'm saying is, if you have a chance to buy Manhattan for 60 guilders in 1626, you should buy it. But what I would say, which is deeper, is you could buy Manhattan real estate every decade for 300 years and always pay more than the previous guy paid, and it would still be a good idea. And that's because it's the greatest city in North America. Yeah. Everybody wants to do business there. There's a limited amount of land. It's a perfect rock, limited amount of land. So there's never a bad time to buy Manhattan.
But even if you look at this, though, Louisiana, we bought it for $15 million. APR 6.3, payoff 12 trillion. California 1848 for 18 million, 7.78 trillion. Alaska for 7.2 million in 1867. It's a trillion, 7.8. You're saying Bitcoin's going to be 240 trillion in 21 years.
Are you older than 18? We're looking for motivated people to take.
Yes, he is. That's basically what he's saying. He's saying that Bitcoin will damn near flip the S&P 500. It will definitely flip gold. It will flip a lot of different things. Let's continue.
Yeah, just very easily. The way you say it, it's not a big deal to you.
I mean, look, the takeaway from that slide is the key to getting rich is by scarce, desirable property, pay for it with fiat. I mean, how much is a guilder worth today? Like, pay for it with money you printed, borrow the money. But, we borrowed the money to pay for Alaska. I mean, the country was broke in 1867. We just fought the Civil War. But what did we do? This guy Seward had the vision to print a $7.2 million check, pay off the Russians. And so, number one thing, buy the property. Number two thing, hold it for a long time, right? I mean, because it might not feel like much, but when you're compounding over 100 years or 200 years. And so what do all those four have in common? Well, they're all something you would want to hold for more than 100 years. And so what is Bitcoin? Bitcoin is the next frontier. We've already gone as far west as we can go. Now we have to go to cyberspace. I mean, eventually we'll go to outer space, but we're waiting for upgrades in propulsion to go to Mars and the asteroids. But between now and then, you go to cyberspace. And the real point is Chinese billionaires, Russian billionaires, African billionaires, South American billionaires, every company on the planet would rather have their money in the US, but they can't get it to the US. So where else can I put it? I can put it into the city of Bitcoin. I buy Bitcoin, I sell Africa, I sell Venezuela, I sell Russia, I sell Siberia, I sell China, I buy Bitcoin. Bitcoin is digital capital. Everybody wants it. Everybody knows about it. No one can steal it from you. And what's the use case? Well, the use case is to get rich or stay rich, which is like half of everything. Right? The great irony is people can't figure out what it's good for. It's like for the last 10,000 years, people have been trying to figure out how to get money and keep it. What it's good for is the wealth that allows you to power your family, your country, your company.
I don't know if you see it or not, but a lot of big moves are being made in business right now.
To me, that totally makes sense. If you have a business out there, make sure that you attach, not financial advice, make sure you attach some Bitcoin to it to make sure that it's ultimately successful. Because look at all the big boys. Tesla, he has a bunch of Bitcoin on his balance sheet. You have a lot of companies with Bitcoins on their balance sheet. And if he has that on his balance sheet and he's actually building robots and doing this and doing that, what do you guys really think? What do you guys really think? I have another video I wanted to show you guys from Patrick. Because I thought this interview was impeccable. It's something that we all should want to know about. And let's talk about the effects of let's talk about the difference between Bitcoin and Ethereum. And Michael Saylor will explain to you the difference between Bitcoin and Ethereum, right? Let me know if you guys can see this page. Let me know if you can see the page. Stop sharing. Let's share again. Okay, here we go.
Earlier, you said we can cover that as well.
Yeah.
There's a lot of guys that are pro Ethereum and, they swear by it. Now with NFT, most of the purchase, 50% is being done by Ethereum. Ethereum's eventually going to get better than Bitcoin, or, Ethereum's going to be right there next to Bitcoin. What are your thoughts on Ethereum?
So first of all, if you look at the crypto ecosystem, there's crypto property, there's cryptocurrencies, there's crypto platforms, and there's crypto securities, and there's even crypto art. Right? These are just asset classes. Maybe there'll be crypto commodities. NFT is crypto art. It's like art cryptographically protected. Stable coin is cryptocurrency. $1 or €1 moving on crypto rail. It's currency because I can move it as a medium of exchange without paying a tax bill on it. Ethereum's crypto platform, right? People are building other things on that platform, and that's the principal appeal: smart contracts and the fact that you can build something. Bitcoin is crypto property. It is a long-term store of value, and it is the dominant crypto property. And the way it establishes itself as crypto property is through Nakamoto consensus and proof of work. You have a decentralized mining network that is encrypting energy with the SHA-256 hash function in order to create this wall of encrypted energy and make it resistant to denial of service attacks, other sorts of attacks. It needs to be robust and have integrity over time and space. And that's the technique that we've developed. Now, here's the big idea, an important idea. Most people don't understand securities law. Okay, Bitcoin's the only proven digital property that we have created in the world. We have created a property and not a security. The definition of property is a common commodity that is beyond the control of any one individual or corporation. If something is deemed property in a legal sense, it means it wouldn't be regulated as a security by the SEC.
Let's run that back, because I think that went over a lot of people's heads. Let's run that back. Let's run that back.
Now, here's the big idea, an important idea. Most people don't understand securities law. Okay. Bitcoin's the only proven digital property that we have created in the world. We have created a property and not a security. The definition of property is a common commodity that is beyond the control of any one individual or corporation. If something is deemed property in a legal sense, it means it wouldn't be regulated as a security by the SEC. Gold is property. Soybeans are property. Wood, lumber, land is property. Bitcoin is property. Okay.
Did the SEC come out and officially?
Let's go back again. I want to go back from the beginning because he said something that actually we have to pay attention to about what each of these things are. From Ethereum, each one of these things are special in their own right. From NFT to Ethereum to the stable coins. Let's go back to see what he's saying, because don't let these things go over your head. This is very important. This is an educational platform.
Crypto property, there's cryptocurrencies, there's crypto platforms, and there's crypto.
You're listening. Crypto, listen.
But then Bitcoin or, Ethereum's going to be right there next to Bitcoin. What are your thoughts on Ethereum?
So first of all, if you look at the crypto ecosystem, there's crypto property, there's cryptocurrencies, there's crypto platforms, and there's crypto securities, and there's even crypto art. Right? These are just asset classes. Maybe there'll be crypto commodities. NFT is crypto art. It's like art cryptographically protected. Stable coin is cryptocurrency. A dollar or a euro moving on crypto rail. It's currency because I can move it as a medium of exchange without paying a tax bill on it. Ethereum's crypto platform, right? People are building other things on that platform, and that's the principal appeal: smart contracts and the fact that you can build something. Bitcoin is crypto property. It is a long-term store of value, and it is the dominant crypto property. And the way it establishes itself as crypto property is through Nakamoto consensus and proof of work. You have a decentralized mining network that is encrypting energy with the SHA-256 hash function in order to create this wall of encrypted energy and make it resistant to denial of service attacks, other sorts of attacks. It needs to be robust and have integrity over time and space. And that's the technique that we've developed. Now, here's the big idea, an important idea. Most people don't understand securities law. Okay, Bitcoin's the only proven digital property that we have created in the world. We have created a property and not a security. The definition of property is a common commodity that is beyond the control of any one individual or corporation. If something is deemed property in a legal sense, it means it wouldn't be regulated as a security by the SEC. Gold is property. Soybeans are property. Wood, lumber, land is property. Bitcoin is property. Okay.
Did the SEC come out and officially state that it's not a security, it's officially a property?
It's understood that Bitcoin is not regulated by the SEC. Bitcoin is property. It's the only thing we all agree on in the crypto marketplace, that Bitcoin is property. Securities are regulated by the SEC, and you can create a security. MicroStrategy, MSTR, is a security. Go read my 10K statement. It's 123 pages of disclosures that are legally required for that stock to trade, that security to trade. It costs $20 million a year for us to maintain all the disclosures to be compliant with securities law. If you're a security, it's a different thing. Bitcoin is property. Ethereum, everything else in the crypto ecosystem, likely they're all securities, right? Why are they securities? They're controlled by groups of developers. They're issued pursuant to ICO's initial coin offerings. That makes them a security. If there's a pre-mine and there was a group of individuals that initially control the thing, it makes it security. If anyone can exercise undue influence, it becomes a security. And technically, if you look at the definition, it's when you're making investment of money, relying upon the efforts of others and expectation of.
So that goes to show, why was XRP considered a security? Why was it considered what it wasn't? It should have been considered a commodity. I see why the SEC had to drop that case. Leave your thoughts down below. Let's go.
Profit, it becomes an investment contract, a security. Okay. The fundamental difference between Bitcoin and Ethereum is Ethereum's monetary policy changes every 6 months. Every few months it changes. There's a difficulty bomb in Ethereum that's been getting pushed back since 2016. They keep pushing it back. When it goes off, it will wipe out, obliterate a $50 billion Ethereum mining industry. Just wipe it out, completely change the protocol, flip everything to proof of stake. They keep putting it off. Okay, that sounds like a group of people exercising influence over the protocol. The thing you need to know about Bitcoin is on Pizza Day, May 22nd, 2010, Bitcoin was trading for a couple of pennies for the first time in 15 months or something like that. The protocol hadn't changed and has not changed. When it was a penny, the protocols were all the same. Today, they're the same exact protocol. There was a war fought over this, the block size war. And the block size war, all of the powerful holders and miners and exchanges wanted to change the protocol and double the block size. It would have changed all the economics of Bitcoin forever, for the next 1,000 years. It would have screwed up the economics of the miners. It would have shifted the balance of power in favor of some holders versus others. That war was lost. The original Bitcoin protocol continued on, and that means it's an unadulterated protocol, and it's shown itself to be resistant to the influence of any group of people. That's
if y'all paid attention to what he just said, it makes sense on why. Yes, Ethereum is a building platform, but it's actually what? It's a proof of work. And a proof of work, does it actually work? How well does a proof of work actually work? Because you got technologies, because with Ethereum, in order for you to send money from there here to there, it's so slow. It's like putting an electric engine inside of an old body heavy metal Mustang, and you want it to go at a super fast rate, not knowing that the metal and the framework that's on it, it won't make it go as fast. It's no way. You got to rebuild the whole system. You got to rebuild the whole framework, which means that the framework from proof of work to proof of stake, that's what is needed in order to thrive. But they didn't discover this first. They discovered this on layer 2, not layer 1 with Ethereum. So what would that mean for Ethereum future? I see why other companies, instead of building on Ethereum, some companies know not to build on it, and they building on something called Polygon, or they building on XRP, or they building on Solana, or they building on you have a couple of other coins out here. They even building on Bitcoin. But let's continue.
That's what makes it property. Property is critical because if property makes Bitcoin, being property makes it the ethical foundation of the crypto economy. And by ethical foundation, I mean, it's unethical for a public figure to endorse a security. If you're the mayor of a city, the governor of a state, if you're a politician, a congressman, a senator, a president of a nation, you can't endorse a security, nor can you make a security underpinning of the balance sheet of a public organization, right? It's like I couldn't say I really think that every citizen of Kansas City should buy Twitter stock because it's a better store of value. It's conflict of interest. It's probably illegal, right? Probably violates all sorts of Foreign Corrupt Practices Acts, as well as all the ethics laws. And so this is a very bright line, property versus security. And as soon as you start to exercise influence over the protocol, it becomes a security. If you look at all the cryptos, there might be a dozen that you could debate are property, a debate. Of the ones that you could debate are property, there's one that's dominant, which is Bitcoin. there's 17,000 securities. As the SEC and the regulators move, there's going to be a massive shakeout. If they ever do clarify what the securities laws are, there's a whole set of disclosures and obligations, and then you're going to see, the entire industry rationalize in a big way.
So if you enjoyed this little short segment from the podcast that we did, here's another short.
Okay. So with that being said, we're going to keep you guys updated on this one. Hit that like button, subscribe to the channel. We just did an audio reaction video of Micah Saylor, and we have Patrick Bet David on PBD. I'm going to leave the link down below too as well, because you have to give credit when credit's due. I will leave the link down below as well, because you have to give credit when credit's due. Let me copy that link and leave it down there right now. Hopefully everyone have a joyous, wonderful day. May God bless everyone out here, and bless yourself, and continue to learn about this space, because we're at the beginning of this space. So continue to learn about this space. It's a very important space. Peace.